Hi, I'm Richard Watts, founder of HR Maritime. Welcome to Commodity Brief, the show all about commodity trading, in partnership with Dukescopy TV. In this episode, we're going to be looking at trade finance and the different methods of payment of goods. When we're looking at trade finance, it's important to be aware that most of trade around the world is financed by banks. This allows the different parties involved in trade to take advantage of the credit available to the banks and to expand the volumes that they can trade. So first of all, if we have a look at it from the trader's point of view, it's very useful for the traders because then they can work with the banks and they can take financing from the banks in order to buy their cargoes at the loading port, transport them to the discharging port and sell them again there and renew this for each of their cargoes. And some of these trading companies will have very large amounts of financing available from the different banks. If we look at it from the point of view of the exporter, say for example the farmer, then the banks, the financing they're receiving from the banks enables them to build up stocks of their cargo in order to be able to sell a full cargo of maybe 70,000 tons of wheat in one go. And if we look at it from the point of view of the importer, then they can also use financing from the bank in order to go out and buy very large quantities of cargoes in order to serve the market in their country. Now, whenever we're looking at trading and trade finance, it's important to look at the different aspects of the methods of payment for goods in this industry. So obviously we can't pay for a $40 million cargo of oil with a briefcase full of cash. It simply doesn't work. And so when we're looking at paying for the goods, we essentially can boil it down into three different methods of payment. First is telegraphic transfer. This is simply transferring funds from one bank to another, and this is usually performed between trading companies or counterparties which have a high level of trust between them. And so this usually involves paying for the goods first, then the goods being delivered, or the goods being delivered and then the payment being made. So obviously the two sides have to trust each other quite a lot. The next that we might look at is the cash against documents. This is a method in which the exporter or the seller will present the documents to the buyer's bank, and the buyer will decide whether they are satisfied with those documents and whether they are going to pay for the goods. However, the bank is not offering any guarantee that the payment will be made. The only guarantee is the contractual relationship between the two parties. The next is letter of credit. Letter of credit is used intensely in the world of commodity trading, and this is when a bank issues a formal guarantee that if they receive certain documents exactly in line with the terms which are required, then they will make payment for the goods. Now, this is very useful because this is a guarantee for the seller and for the buyer. It's a guarantee for the seller that they will receive payment of the goods if they present the right documents, and it's a guarantee for the buyer that they will only make payment for the goods if the right cargo is shipped and the right documents are provided. So the world of commodity trading is absolutely massive. World trade in 2011 was estimated at about $17 trillion. The banks are very heavily involved in this, but we're seeing more and more alternative forms of financing. We're seeing funds which are being set up to provide financing, and we're also seeing trading companies which are able to provide financing to smaller trading companies. And so it is an area of the business which is becoming more interesting, it is changing quite rapidly, and it is very important to be very knowledgeable about the technical side of it because we're talking about very large sums of money. So that brings us to the end of this episode of Commodity Brief, and so I hope that you'll come back, and in partnership with Dukescopy TV, thank you for watching.